So you are saying that you're in the lending space, right? So if I have to break down lending into three parts, one are the banks like the HDFCs, ICICIs of the world, right? Then comes Bajaj Finance, which are the NBFCs. And then there's a segment which is P2P lending. This is the formal set of lending that's covered in India, right? So where does P2P come in the picture? And can you please break what is peer-to-peer, that is P2P lending for us?
Sure. So P2P lending, like you mentioned, as compared to banks and NBFCs, is actually the most recent or the most innovative format in the space. In fact, I would say it is the most modern and most structured, most transparent format of lending. So, for example, when you're doing an FD with a bank, you actually do not get any insight into where that money is being lent, whom the bank is lending to, what is the nature of borrowers, and so on and so forth. But P2P lending, because it deals with individual investors' capital, is required to give a lot of transparency into where the platform is lending, who are the borrowers, which segment are they operating into, what is the purpose of the loan, what is the amount. A whole lot of information is transparently given to each individual lender on the platform. So it's actually the most structured, most transparent, and the most seamless format of lending. And there are quite a few advantages vis-a-vis banks and NBFCs for the lender, and some disadvantages as well. From an advantage perspective, P2P focuses on building a common marketplace for a large set of lenders as well as borrowers. By virtue of that, your cost of operations come down because you're technology focused. You can bring down the cost. It focuses on disintermediation, which again brings down a certain element of the cost. The benefits, all of these combined, can be passed on to either the lender in the format of higher returns or to the borrower in format of lower cost of borrowing. Which then enables a virtuous cycle, right? Because as a borrower, if you're getting a lower cost of loan on a P2P platform, eventually you will start gravitating towards a P2P platform for your low ticket size loans as and when you might want them. And because the best quality borrowers might get attracted to a P2P platform, the lenders also might be willing to invest into the platform and to generate a slightly higher return than his traditional investments.
Got it. So like if I have to again come back to the segments of formal lending in India, if I have to say take a loan for my marriage, then I might approach HDFC Bank for a personal loan or a housing loan, right? Then if I have to say purchase an iPhone, then I can approach Bajaj Finance at zero cost EMI. Where does P2P come into picture? What is the thing that P2P platforms are doing which the banks and the NBFCs are not doing, or they can't do by virtue of regulation?
Sure. So I'll give you the global context here as well. That will help you look into the future of how it will play out, probably to some extent in the Indian market also, right? Globally, what has happened over the period of time is that fintechs as well as P2P lenders have focused on a completely digital journey for the last 15 to 20 years, a completely automated journey. By virtue of that, the cost of originating a retail loan, which is small ticket size in nature, has come down significantly. Now, a bank kind of entity which has a very large branch network, high operating costs, generally finds it more economical to do large ticket size loans, be it auto loans which are 5 lakh, 10 lakh, 15 lakh in nature, and more specifically home loans which are 20 lakh, 50 lakh, a crore and higher. Because the cost of originating a loan does not vary significantly depending on the ticket size, but it varies depending on the operational setup that you've got. So what has happened globally is the large ticket size loans and corporate loans have become the dominion of the banks. Small ticket size, credit card kind of loans, personal loans have been starting to being dominated by the smaller players as well as which are in the fintech space or in the P2P lending space. Something similar, I would believe, to a smaller extent will play out in the Indian ecosystem also, where if someone needs a small ticket size loan for a temporary cash flow mismatch of 50,000 rupees, the entire process of originating that loan with a bank, where you walk into the branch or apply online, then wait for 3 days or 5 days for it to get approved, and then 2 days for disbursement, the customer is not as patient as he was 15 or 20 years back. Two, because the need of these set of loans is so high frequency, right? Where I might want a 50,000 rupees loan 3 times in a year, I may want a consistent platform which gives me the same experience each of those 3 times and does not take me through a lot of paperwork every time to enable a drawdown. So over the period of time, the small ticket size personal unsecured loans is where the P2P players or fintech players will start gaining a lot more wallet share. Not to say that banks and NBFCs will not operate in that segment, but that is where these players will be able to get some wallet share. As per the regulatory guidelines right now, P2P players can't operate in any kind of secured loan. So be it a car loan or auto loan or a home loan, P2P players are currently prohibited from originating loans in that segment.
Got it. So secured part goes out for the NBFCs and the mainstream NBFCs and banks, while P2Ps are also NBFCs, right?
Correct.
You need to be an NBFC by virtue of RBI regulations. Okay.